Good to see you. So, all right, 3 straight weeks up for the S&P and the NASDAQ. Are you starting to think that a soft landing is a real possibility?
Well, especially when we got such a strong jobs number like we just got, I do think that's becoming more and more of a realistic possibility, right? Because I think the idea has been that it's been this good news is bad news idea, where good news on the economy has been bad news for the stock markets. Yet we got this really positive news showing that labor is continuing to be really tight here. Yet the stock market's actually a pretty muted response to this, which I think is just showing the idea that, yes, we might be able to bring down inflation and not be forced into recession because we have a strong labor force, which is great news.
Yeah, I mean, what is it? Tom Lee came on with me earlier today and said the market's quote unquote benign reaction to the hot number is telling to him. It sort of speaks to the story that you're telling here. The market you would have thought would have every reason to go down, which it did, but it didn't stay down. That's his key.
Yeah, it opened lower, which I think we all expected to see, but it very quickly, by like 9 before 10 this morning, made up those highs, which I think that's what you're seeing is likely a lot of this negative news has already been priced in. We've been talking about that so much, where the markets are going to always overshoot things. And they have priced in so much negativity here, and any sort of positives, I think, have a lot more catalyst to run, and that's exactly what we're seeing right now.
Yeah, the problem is, even if we do have a soft landing, we're not going to know about it for a long time. And the Fed is still going to be hiking, and those on the other side of your argument would say there's no way that you're going to be able to hold up in the face of all that tightening. Now, how do you respond to that?
Yeah, and I think what you need to realize is the markets are going to bottom sooner than the economy, right? So even if there is a slowdown in the economy, and this happened right in like March of 2020, the markets bottomed well before the economy did. And so even if we are in a slowdown, the question is, have the markets already priced that in? So when you're seeing a day like today where we get positive news, a very muted response, I think that's the idea is, are we going to go into recession? Maybe we're already in one. I'm not at that camp, but even if we are, it's likely going to be muted because of such a strong labor force. And even then, the markets will probably price a lot of that in. So if we have a muted recession or no recession at all, the markets are really going to take off.
That's Jamie Dimon's point, right? He was speaking to NBC's Boston affiliate in the last 24 hours or so ago, said, I don't think I've ever seen a recession where employment is getting stronger, not weaker. Jobs are plentiful. Wages are going up. People have more money. They're spending more money. They have more money than they had pre-COVID. They're spending 10% more than last year, 35% more than pre-COVID. That doesn't sound like a recession to me currently. It sort of goes to your point, throws cold water on the idea that we could already be in a recession if you just added 500,000 jobs.
Yeah, and I like that you mentioned Dimon here, because he's actually also pointed out how strong the consumer is. And they have, I think, a really good understanding of how the consumer and how their balance sheets look right now.
He of the hurricane comment of a few weeks ago, right?
Completely reverse that, right? And I think that's where we're seeing they're continuing to show that consumers are still spending, labor force is strong, and seeing that they're showing that we're not seeing these high credit card balances, people aren't having these loan debt, not having issues paying back their loans. I think it all goes to show here that we are on a lot more positive footing than people had been fearing.
So I'm looking right now at the 10-year. Let's call it 285, okay? What's the problem if rates continue to go up? Is that the market's biggest near-term issue right now, or does it not matter anymore?
Well, I think inflation is the big issue, right? Because that is going to mirror it to a certain extent. But what we're seeing is it's not necessarily in the next 3 months what's happening, but 6 months from now, are we going to see inflation start to come down? And you are starting to see signs of that. And so if we're starting to see inflation coming down early next year, that would be a really positive thing. It can't stay this high forever. If we continue to see inflation running at 9% a year, at a certain point that becomes unsustainable. But I think the fact that that might come down, that's a really positive sign.
See, when you say unsustainable, I'm thinking about, is the tech trade, is the rally there unsustainable if interest rates continue to go up, right? If they push higher from here, does that hurt a trade that has worked especially well? NASDAQ, I said, 3 straight weeks of gains. Bespoke had a tweet a couple hours ago. NASDAQ's been on an intraday tear lately. Over the last 25 trading days, that's 5 weeks, 13 days have seen intraday gains of 1% plus. You don't see that type of intraday strength often. Can that hold up?
I'm glad you bring this up, because I do think this is something people aren't necessarily focusing on. Is short term, your tech trade is doing really well. But longer term, even if inflation is peaking, I don't think it's going to come down to the rates it was. It's more of a moderation, in which case, if we see inflation at higher rates than it has been, some of your commodity related assets, your inflation hedges, are probably going to continue to outperform your tech trade, your large growth, your long term bond fund. So yeah, I would not. We do own that category, but it's not something I'm overweighting right now. It's not something I'm throwing money at, because I think that trend is going to continue here.
You still like things like energy, which have come down? I mean, the thought was maybe they've come down because money's come out and it's helped fuel the tech trade. Is that all of a sudden going to reverse itself?
Well, I think, if anything, the fact that energy has come down is more of an opportunity to get back into that, because I think that trend is likely going to continue. You have these huge supply and demand constraints with energy that aren't going away. You even saw Exxon, when they came out with their earnings, they said that this issue with supply and demand is not going to be fixed for probably a couple of years, and we'll have some of these elevated prices. So yes, I think that's actually still a really strong trade. The fact it's come down is more of an entry point.
You still like materials, industrials too, even cyclicals like industrials in this sort of an environment? I guess playing on the soft landing idea.
I do.
Right, can't have a hard landing in like industrials, can you?
Right, that's the idea. Is, are we going to get a hard or a soft landing? I'm much more of the mindset that we can get a soft landing here. So yes, you are going to want those cyclicals. You're going to want those industrials in there. Make sure you're well diversified, that being said. But yes, I think those are good opportunities.